And welcome to the VSA Capital Tech and Transitional Energy Podcast. It's Thursday, 17th of November. It's we've just had the autumn statement, or whatever they call it, from Jeremy Hunt, and so we're all a bit poorer. Are you feeling a bit poorer, Phil?
Yes, it's very sad.
Don't cry. So I think the markets have taken it actually relatively calmly. Actually, I don't think there's any, and I don't think there's anything. Well, we're all a bit poorer, aren't we? We're not going to talk about that. Everybody, if you want to know about the autumn statement, go and find out about it yourself. That put everyone in their place, didn't it? I'll tell you what, we also funny. I've just, I tend to sort of have a little bit of a rant sometimes at the beginning of these podcasts, but obviously we've got the G20 going on at the moment, and I noticed that Justin Trudeau upset Xi Jinping. Did you see that?
Yes, I did. They were having quite an animated conversation.
No, it's really rather interesting, I thought. Anyway, look, I'll tell you what, I think we sort of been chatting a bit about, we do talk a little about China. China is so important for the whole macroeconomic global environment, which then comes down into tech and trans and that sort of thing. And, China has got actually some pretty substantial issues going on at the moment, which I must confess, I've sort of been putting my mind to a little bit. As you know, I wasn't on the podcast last week because I was walking along the beaches, not looking at the peaches, but actually thinking about things a lot. And you know what? I find China really interesting to try and work out at the moment because, they've got this zero COVID policy. We know that actually they're currently undergoing deflation because they've got factory gate prices going down. We know that freight rates are back to pre-pandemic levels and actually going down. The other thing, we know house prices in China are going down. We know that they've got sort of they've fallen by about 15 to 20% over the last couple of years. They also have a really serious problem with youth unemployment, which has doubled from about 10% to 20%. And, when you get all this unrest, or difficult, people feeling worse off than they were last year, that's when you start saying, hang on, what is this government doing for us? And the Communist Party clearly can't have that. Otherwise, you end up back in 1989, and we all know what happened then, don't we, Phil?
Yes. Yeah.
What was it?
Tiananmen Square.
Well done. I love it when you get a quiz question right. So what I find interesting is that what also China can't afford to really do is end up in what I describe as a Japanese-style property slump, an aging population, deflationary disaster, which Japan saw in the sort of 80s and 90s. And so what I think China's going to do, and bear in mind it can do what it wants really because it's a communist government, I think it needs to sort of quietly devalue the renminbi. And I think the government will then absolutely push its own manufacturing to basically get back manufacturing and sell goods to the West at very low prices, almost flooding the West with cheap goods so that we just can't resist it. That way, he gives a massive boost to the Chinese economy. And actually, what he does to us is he sends the deflation our way, and we end up buying Chinese goods again. And as an example of this, also the way I see things going, I don't know if you noticed, but they've just announced that I don't know if you follow this, but I obviously follow the airline industry quite closely. The C919, which is the first Chinese, it's a sort of Airbus A320 or a Boeing 737 equivalent, but it's their first commercial aircraft, which they've been designing for ages, by the way. But it looks like they are actually about to start selling them. So all of those aircraft off Airbus and Boeing that the Chinese were buying, suddenly they're going to actually buy Chinese aircraft. Even Ryanair, by the way, has said they'll buy one of these. I also noticed that they are basically, Mercedes-Benz have said that they would sell an EV into China. Wait for it. All right, this was incredible. For just 50,000 RMB. That is $7,000 or under £6,000 for a Mercedes EV. In other words, what I'm trying to paint here is we're about to go into, I think, this weird sort of mid next year deflationary era with the Chinese basically pushing out cheap goods, really cheap, that we won't be able to resist, which changes the whole dynamics an awful lot. That was a little bit of a starting rant. As you can probably gather, I don't know. Did you agree with any of that?
Yes.
Good.
I do. I've been reading about this, and I'm, old enough to remember what happened with Japan in the late 80s and the 90s. And China has got a massive amount of production capacity and people employed that needs to be active. And ultimately, if the global economy is softening up, the way to drive demand is going to be through pricing, and as you point out, exporting deflation into the West. Yeah.
So it could be quite interesting.
Yeah.
And then I see the other thing that just sort of caught my eye a little bit this morning, actually, was that Andrew Forrester, who is Forrest, the CEO of Fortescue Metals, phenomenal, probably the most successful mining guy ever in Australia, is pledging, I think it's something like, he's trying to set up a vast fund, billions, to basically rebuild Ukraine, but rebuild it in a green way, with sort of renewable energy and everything, which I think is fascinating. And I think it's Larry Fink of the CEO of BlackRock, who is also a billionaire, has said this is a great idea. We also want to get involved in this. Yeah, actually, it's a $25 billion fund he wants to launch, and he has said that he will commit $500 million to the fund. So that will be a fascinating thing as well for the whole transitional energy plan. But we're going to start on transitional energy because also, sadly, today, it hasn't been a great day for the sector, has it, Phil?
No, not for the UK sector, sadly.
So talk us through Ilika and Ceres, who had announcements today.
Yeah, I mean, the first one I saw was Ilika, ticker's IKA, 43 million market cap. That's a trading update. This is battery tech.
Solid state battery.
Yeah, absolutely solid state batteries. The challenges of engineering and doing advanced tech. They've said they've been developing products, but of course these products you develop them, you get your design finalized, but you have to run it all through product qualifications, all the testing that goes on. You also have to optimize your processes so that you can yield the thing commercially. You don't get loads failing in production. And that's what yield drives margins. And they've been doing all of this work, but they have said that on their M300 product qualification now expected to complete in Q2 of 2023. Though I don't reference the statement, the original commitment on that, but nonetheless, they've said that they've got commercial demand in the medical device sector. And initial orders, but they've said that revenue ramp up will be commensurate with product commercialization timelines seen in that sector. I'm not sure quite specifically what that means, but on their larger batteries for electric vehicles, they've said the performance of these, the tech is increasing from what they've seen, but they've said that targeting lithium-ion energy density parity, energy density is all key batteries, towards the end of calendar year 2023 rather than early in the calendar year 2023. So quite a slippage there. And then they've announced small revenue and EBITDA losses of 4.5 million for the first half. So still got cash, but delays in major projects.
Well, the killer punch, unfortunately, was at the end, where it actually said, as a result of the revised expectations to the speed of Sterek's ramp up, revenue in full year 24 and 25 were materially lower than in previous forecasts.
That's right.
So you're right, they've got 18.6 million of cash, but they look as though they're going to have an EBITDA loss this year of 9 million. Well, that only gives you 2 years of cash, which is what the market is focused on. Look, we actually like this company a lot. I think they've got a really interesting product. Building batteries is just so tough. We've actually done some work with them in the past. The real shame is, the price now is down at 27p. When they floated back at the end of 2010, I think it was, they were trading at something like 75p. That's not a great 10-year track record, but I don't blame it on them. It's actually an interesting company, but clearly got some really big challenges ahead. So that was the Ilika, and then Ceres, you better talk through that one.
Yeah, quickly. Ceres powers fuel cells, and they've been around for a good number of years, and also electrolyzer technology as well. But they've got licensing partnerships with Bosch and Doosan and Shell and Weichai in China. I mean, these are important partnerships, but they are, looking to develop a joint venture with Bosch in Germany and Weichai Power, and they have said that last night, quote, negotiations will not conclude this year, and approvals for joint venture agreements with those parties are being postponed until 2023. So clearly that's not progressing as expected for them. And they've said that delay their intention to seek a premium listing on the main market. Well, it's the slippage here that's important, and what will happen in 2023 with these agreements, which are important to them.
It's a shame because actually, if you look at most of the sort of RNSs across the whole market, a lot of them are pretty good. And actually, there was one little one today that was actually a bit more upbeat than normal, but it's a company that's gone through a lot of stress and strain. But I know we've talked quite a lot about it, and so I'll let you talk about it. Because again, we like what they're doing, but they've got themselves into a bit of a pickle. But Tecmar actually came up with a little bit of potentially good news, didn't they, with a potentially strategic investor?
Yes, they've been they've had a strategic review on the business and how it's going to proceed and be financed going forward. And they have been obviously reaching out to potential partners to work with them, but they've said that they've made quite good progress in those discussions, and they've got a partner that may invest and help them stay as a public company, rather than being acquired or take private. So there's a bit of progress for them.
Yeah, well done, Tecmar. Well done, Alistair. Now, talking to which, because these, we had our picks and shovels list, didn't we? Which hasn't necessarily been the best list.
Oh, no.
But we do try. It's just been a very tough market. But one of the others on that, actually, again, which has had a lot of issues recently, and actually we do act for them, so we're a bit careful. But Pressure Technologies came out. I think was it on? Probably it was on. I'll get my dates right because I forget sometimes, because obviously I'm sometimes made inside beforehand. But I think it was on Tuesday. That they've raised £2.5 million at 30p, which actually was a pretty good raise, not a very big discount. And the existing shareholders certainly have showed us, and Peter Gillenhammer, very supportive here. They have lost their CFO and will be looking for a new one, but I think he rather took the someone had to take one for the team, shall we say, over the issues that had coming up to it. But any view on that, Phil?
Yes, I have. This is a long-established. Pressure is a long-established engineering company in Sheffield. They specialise in very large cylinders that can store gases under extreme pressures. These go into submarines, so they got big contracts with the with BAE Systems on the Dreadnought submarine program, but also for hydrogen storage, and they're working with Shell on that. So, they've got good long-term contracts. They've got super blue chip customers, but it's engineering, it's lumpy contracts, material costs have gone up, particularly for steel, and the manufacturing can be challenging. They've had some difficulties there, and they're exposed to the oil and gas business as well. And that's been slow but recovering. So it's created, obviously a stretch on working capital and cash requirements. So very pleasing to see them raise that money. It was needed.
Yeah, look, I'll be honest with you. I own some of them myself. I've been up and visited. I have a lot of time for this company. If you tried to replicate it, it would cost you far more than the current share price, and it is involved in, very important Ministry of Defence contracts, so they really can't even let it go bust either. But you've got some very supportive shareholders there. Clearly, after you've just done a fundraise like that, you can't expect the price to go shooting off. But you know what? Probably we'll find in about 9 months' time, 6 9 months' time, suddenly the price will be twice as high as it is today. No one will quite know why. It'll just go there. But yeah, I like the stock a lot. Anyway, what else have you been saying? Because I must confess, I've been down in Cornwall, haven't I, doing a bit of bit of work down, working from Cornwall, as they say. So you're probably going to have to do all the news today, Phil.
That's no problem at all. Right, let's stay on the subject of BAE Systems. Who Pressure Tech obviously are working with on the submarine side of things. But BAE Systems, one of our biggest defence contractors, I think it's BAE, I think it's 4100 BAE Systems, it must be. But they've reiterated their group guidance for 2022. And they're seeing some benefits from FX, but also they're involved in the share buyback program. But they have pointed to a strong year for order intake. Well, this is defence. And they secured 18 billion of orders in the first half, and they secured further orders of 10 billion post the first half, and they've highlighted in there, a lot of folks would have seen this on the news in particular, but they've received orders from the MOD for Type 26 frigates of 4 billion, but also they've seen some pretty significant orders coming in from US defence contracts as well. And then just a bit more about what money being spent on naval systems in the UK, their jobs. But it's one of our biggest defence contractors and an important business for the UK. Not surprisingly, the shares are doing well.
Bearing in mind there's a war going on and there's missiles firing everywhere, it's hardly surprising. But actually, what I find interesting about BAE Systems, I mean, it was originally the British Aerospace.
Yeah, that's right.
And it's been around on the stock market, ever since I've been doing it, and that's since the early 80s. And I can, actually, had I sensibly bought them maybe when I first came into the market in the early 80s, I probably could have bought them for, I don't know, today's money equivalent, because it's had gone through a lot of changes. I don't know, 10 or 15p or something like that. And it's actually, if you just sat and held onto them, yes, they've had the odd bump with, different things going on. But here we are at 762. You would have made a huge amount of money. And it just goes to show that, a good company in something like a defense industry, great investment.
Good companies, strong brands, and staying on kind of big engineering. I just caught this, Andrew, as we've had to delay our podcast a bit today, but Siemens.
Yeah.
Statement from Siemens. Obviously, technology and engineering conglomerate. It says on the statement, trains to factory software. Well, that's a fair description from Reuters there. Probably trouble on the Siemens train this morning. But they came out with a statement on their order backlogs, reported backlogs of 102 billion euros. So very confident chief executive here. We are very confident continuing strong business trajectory in 2023 business year. No softening of demand for hardware, software, digital business demand. I mean, I've got to say, this is seems to be quite a bullish statement. And look, Siemens is just one to watch, because you've got in terms of industrials and industrial spend, you've got ABB as well, and Schneider in the space, and they're forecasting revenue growth of 6 to 9% during the 2023 fiscal year, and it's not seeing any signs of industrial slowdown. There we go.
Yeah, Siemens is very complicated, because the Siemens Energy, and then they're buying Siemens Gamesa Renewable Energy. I think I always get a bit confused, but obviously it's quite important for the whole sort of wind power and long duration energy storage. But that's really good news that they've just come out with something very positive. That's, we'll hate to harp on about it, but we're sort of, Infinity Energy Systems has this joint development with Siemens Gamesa Renewable Energy. We're all hoping that commercial release date will happen next year, and actually they will suddenly become very, very interested in the whole long duration energy storage market. So that is great news. Well spotted, Phil.
Yeah. Okay. So this kind of moves on to Spirax Sarco. SPX is the ticker, 8.3 billion market cap. And they had a trading update for the 4 months to October end. Spirax Sarco is a long established industrial company. And they specialize in steam equipment for steam processing, and steam processing is used in all sorts, particularly food manufacturing. I think it's used in pharmaceuticals, and the heating systems, and the heat systems are used again, across sort of like semiconductor industry, processing industries, pharmaceuticals, and then they do what they call peristaltic pumps as well. I think they go into medical, but they had a trading update, and this was a really interesting one because they opened up by saying that global industrial production is now forecast to be 2.9% low and 3.5% originally forecasted. So kind of they're seeing Siemens are seeing one thing in their markets. I think Spark Sarco is seeing something else in their end markets, but they had said that in their pumps business seems to be going very, very well. It looks like in the steam side of the business, they're trying to tackle inflationary costs. And they've also said in there they've seen, I mean, they've earlier flagged this a bit of margin impact. And yeah, here we go on the pharmaceuticals biotech sector. They're seeing 50% organic growth. And I think that's on the pumps. But what they have said is that even though they're expecting their operating margins to be low in the second half, below that the first half, they are actually maintaining their guidance for full year operating profit. So, these shares are off, I think, under about 30% year to date. But I would say this is one of those where you look at it, it's got blue chip customers, pretty broad sector exposure, but also a bit of exposure to the cycle and inflationary costs. But it's a strong company. So at a price, you watch it, and at the right price, it's one to look at for the future.
Quite interesting call that. Again, it's a company that's been around a hell of a long time, isn't it?
Yes.
It's been around again
Yes.
since ever I've been in the market. So
Yeah,
you're talking at least 40 years. It never really did an awful lot, did it? Till after sort of the global financial crisis, when it really started to get a lot of momentum and sort of actually shot up to about £16. As you say, it's come back to about £11. So yeah, interesting one. Certainly, as you say, probably one to watch, as they say.
Well, that's it. Just to get reading up on, get to grips with, just look at the end sectors it's exposed to, and watch out for news in those end sectors. And that's what downturns in the stock market, to my mind, and I've learned over the years, are all about. It's like within individual sectors, what's moving, where's money being spent, and where's money likely to be spent for the future. I mean, on those, on that note, Halma as well, which is another of our larger industrials. The ticker is HLMA. Its market cap's 8.5 billion, and they just reported interim results. And Halma, this is tech and transitional energy, but it's one of those companies that's absolutely full of bloody technology. It's like instrumentation, so they do safety equipment, fire safety systems, gas detection systems, industrial access controls. They do environmental monitoring equipment. They've got healthcare technologies. So they acquire lots of smaller companies. So there's lots of individual brands under the mothership that is Halma. But I've got to say, I mean, their results were a bit of a mixed bag. The largest revenue growth, interestingly, came from the USA, mainland Europe. They saw growth of 14% to 13%, but Asia Pacific only 1%. I think this was China impact there. But you've got to look at underlying sort of figures here because of the currency, Andrew. Of course, we've seen, in terms of the dollar strengthening, currency is having a big impact on company results. And they said that they'd seen sort of constant, what was called constant currency. So, it's like for like currency levels, currency growth of 9%. But their pre-tax profits were down a bit to 145 million, 13%. But they had a disposal that wasn't repeated. Nonetheless, I think there was a bit of disappointment in the profit level. And the cash conversion as well was 63%, below 90% target. And that's because they were having to put a lot more money into inventory for working capital. So, again, these shares I think they are down they're about £22.50 today. At the end of December, they were about £32. this.
You're right on the prices. I mean, what's interesting to me about Halma is if you look at the chart again, it's a company that's been around for forever and ever. The chart is almost identical to the chart of Spirax Salco. You know, both sort of went nowhere until after the global financial crisis when they just went shooting up. And they're both big companies now in the FTSE. I mean, you know, I remember them as really quite small cap companies. So yeah, interesting.
Well, again, I remember after the global financial crisis, and I was covering industrials at the time. What happened was, you know, as I said before, a lot of these companies that have got fantastic, you know, within them brands that are known in their customer base. And they got, you know, blue chip customers globally. People started spending. There's a real dip in capital expenditure then, post the crisis, and then people started spending again, and very quickly as well. Companies started to put money back into capex and were buying their kit, and it really, you know, really helped boost them. And then as we went along, and you know, the cost of capital was lower, they were acquiring a lot and building up portfolios of kit. With Halma in particular has been very acquisitive. So yeah. But the ones to these are ones to get to know, get to grips with, look at news flow, and you know, at the right time, because you know, they'll see spend come back.
Well, actually, I'll tell you what. Talking about getting to grips with, and you may have more companies you want to talk about. I'm going to run out of time, but SSE had their results also, and this is a company we've talked about in the past. And it's drives me insane. This, I mean, I actually do own them again personally. And you know, don't get me wrong, I'm doing quite nicely out of it, of course, because it's got a lot of wind power and that sort of stuff. It should tick all the boxes, but for some reason, it never quite takes off. Although actually, again, if you look at it over the long term, it's been actually a pretty good performer. So I shouldn't really complain. But what did you think of their figures, Phil? Did you look at their figures?
It's well, like, come on, Andrew. I always miss one, and you always pull me up on one. No, not come on, man.
I love it. Okay, well, just for Phil, they did have figures. I mean, one of the problems with the SSE is that people are obviously looking at it and saying, well, you know, is there going to be a windfall tax or something like that on it, because it's an energy provider and no one quite knows. Obviously, at the moment, on their energy bits, they're making a lot of money. They were pretty good numbers. They did reiterate their sort of growth rates for the next 5 years, which are pretty good growth rates. They obviously pay out quite a nice dividend. But it's a bit of it's an upsy downsy stock that sort of goes up £2, comes back £2, goes up £2, come back £2. I don't know. It's but actually longer term, it is sort of heading in the right direction. So I think it's a stock that I own. Let's put it that way. It's quite a good pension fund stock, I think. Sorry, I caught you out there, Phil. Come on. Have you got another one or another couple?
Yeah, I have very quickly, and this is on a longer term view, because I remember this Sage Group. Right, ticker's SGE, 8 billion market cap. I think it's our only tech company in the FTSE 100. But they have full-year results. Now, Sage, it's HR and accounting software. Most businesses will know what Sage does. But Sage, you know, was originally, the business was founded on the sort of software licensing royalty model, and it's been moving over, you know, as many software businesses are, onto cloud. You know, onto a cloud model. But they've just reported their results, which show 4% increase in revenue to just under 2 billion, but the US was up 12% to 820 million pounds of turnover, and Europe was up by 8%, and their underlying EBITDA was up by 3%. And they said organic operating profit, always look at this to get the underlying, was up by 8%, and very strong free cash flow as well. Also recurring revenue growing, strong cloud services growth. So that was it. That's a good set of numbers there from Sage, actually. Yeah, so I must admit, I was quite impressed with that.
We talked through half the blooming FTSE here, you know, Phil. All these stocks are in the FTSE. I mean, again, Sage, as you say, we all know it, we all get paid through it, really. I mean, Sage had this crazy .com boost in its share price when it skyrocketed to sort of £8, and then collapsed back down to sort of, I don't know, £1.50 or something. But that since then, the turn of the century after .com boom, it's gone from £1.50 back to £8 again. So we're back on our sort of highs again for Sage Group, off a little bit today. But as you say, some of these big FTSE stocks have been actually pretty good performers because they're, dare I say it, safe and boring, which is what the FTSE 100 is on a sort of global basis. Yeah, no, look, it's they're all nice, safe pension fund holdings, I think.
There we go. Do you want one quick small one before we go?
Oh, go on, why not?
I've got to get one in, and this is we talked about this company before. It's Solid State. It's on AIM. SOLI is the ticker. 142 million market cap. They are a specialist in electronics. They supply electronic components. They design electronic systems. They design battery. They recently made an acquisition of a battery pack systems business in the States. They're exposed to all sorts of markets, communications, defense. But they have said that they have been awarded a 7.3 million contract by a NATO support procurement agency to supply communications equipment to a defense customer. So a bit of good news from them. They had a good, strong trading update in October, where they're expecting 6-month revenues of £59 million, up 51%. Bit of acquisition in there, I think. And they've also benefited from strengthening the dollar. So that was good news for Solid State.
And it's not quite at a record high, but it's up on its highs. It's been up sort of fivefold in the last 3 to 4 years. Been a great performer. Nice stock, as you say. Still plenty of potential.
There. Perfect note to end on.
Right, and that probably is about half an hour as well. I hope everybody found that useful. Do give us comments, etc., etc. I think you maybe tipped it off in a fortnight ago, but don't forget we have our Aquis Showcase event with a few technology and transitional energy companies coming up on November the 29th. That's a Tuesday. It's all day. We've also got Sir Robin Saxby, the founder of ARM, coming along and speaking at 11:30ish or so, I think, telling us his views of the future for technology, the winners and the losers. I think that'll be a key part probably of our podcast, not next week, but the week after. Any other comments? Just get in touch with us. If you want us to, pass this podcast on to your friends. Get everybody listening. On that note, I'm going to stop. Thanks, Phil, for speaking next week.
Will do, Andrew. Look forward to it.